Hey everyone, in this video we're going to be going over an acquisition that was announced today. Take-Two Interactive is buying Zynga stock, ticker TTWO for Take-Two, and Zynga stock's ticker is ZNGA. Now before we get into the deal, how they're going to be paying for it, and if we think you should own Take-Two or not, if you could smash the like button, it really helps the YouTube algorithm, and if you're not subscribed to the channel, please subscribe. Now let's get into it. First, we're going to start with Take-Two Interactive and how the stock reacted to this news. Today, it closed down 13.13% to $142.99 a share. Its 52-week high was $215 almost a share, and its 52-week low is close to where it's sitting now, which was $138.19. Now, the stock was down over $21 today. At its peak, I think it was down over 15% or close to it. So this stock has clearly taken a beating today based on the news. Investors are not happy about what they paid for Zynga. Now, Zynga, on the other hand, up 40.67% today, up $2.44. Its 52-week high was $12.32 a share, and its 52-week low was $5.57 a share. The stock before this news was trading for around $6 a share. Now, for those unaware, Take-Two is a big console maker. They make Grand Theft Auto, and Zynga's a mobile game maker. They make Farmville and Zynga Poker. So basically, it's console meets mobile in this acquisition. And Take-Two is buying this company for $12.7 billion. They're going to acquire Zynga for $9.86 a share, which was a 64% premium to Zynga's closing price on Friday before the market opened today. So if you're a shareholder in Zynga, you're going to receive $3.50 in cash, and you're also going to get $6.36 worth of shares of Take-Two common stock for every share that you have in Zynga currently. Now, what we're seeing is consolidation in gaming. The CEO and chairman for Take-Two Interactive said this strategic combination brings together our best-in-class console and PC franchises with a market-leading, diversified mobile publishing platform that has a rich history of innovation and creativity. He will retain the role as CEO when the two companies become one company, and Take-Two anticipates the deal will help bring about mobile versions of some of its console and personal computer-based games. Now, at first hand, this all makes sense. I like the acquisition, but I ask myself a couple things, and one of them is, why go where the puck is rather than go where the puck is going? So on one hand, mobile has been around, and it's an extremely profitable area of gaming that big console gamers like Take-Two need to compete in, so this deal clearly makes sense for them. But on the other hand, just as you're starting to get expertise in mobile, you're going to need to gain expertise in gaming for the metaverse. And obviously that's a term being thrown around a lot with VR and AR. But at the same time as acquisitions like this are happening, we're seeing Facebook acquiring Beat Saber VR game. We're seeing them acquire Lone Echo VR game maker Ready at Dawn. They bought the fitness VR maker Supernatural. So I ask myself, is the future secure in a company that makes games in the console and even mobile era when we're moving to this VR, AR, metaverse era, when we have companies like Facebook acquiring all these small game makers? And the question is, should the companies like Activision Blizzard, Take-Two Interactive, EA Games, should they not be the ones buying these small VR game makers to ensure their future? Now, putting that aside, I do think mobile is extremely important and will continue to be important for a long time. Now, Activision Blizzard did something similar when it acquired the company King, which makes Candy Crush. In November 2015, Activision announced it would be buying King Digital for $5.9 billion, much less than this acquisition, in cash. And at the time, King Digital was apparently generating $2 billion in revenue and $641 million in operating income. Now, unfortunately, based on those numbers, the King deal does seem to be a much better deal at first look than this deal. At around $700 million in revenue in the most recent quarter for Zynga, that annualizes to around $2.8 billion in revenue. So higher revenue than King, but for Zynga, the annualized loss would be around $160 million. Now, I calculate that loss by just looking around the $40 million loss they had in the most recent quarter and just annualizing it by timesing it by 4. Now, that said, I don't know if they are choosing to take losses to try to increase growth, and they could be profitable if they wanted to show it. I haven't dug deep into their numbers to see the reasons. All I know is a $160 million loss is a lot worse looking than a $641 million operating income that King had, and especially when you're paying about twice the price for the company. Another worry is that we know that King didn't actually have the expertise and the knowledge to bring big console games like Call of Duty to mobile, so Activision needed help from companies like Tencent and others to actually make that happen. So the question is, will Zynga be able to help Take-Two in its mission to bring big console games to mobile in a way that they want to or envision for the future? Now, it is important to note that King is the highest growing segment for Activision Blizzard, so I expect growth and profits from Zynga to become evident for Take-Two once under the Take-Two's management team. That's my hope, at least. Now, Zynga's revenue has grown very well over the last 5 years. You can see here in the most recent quarter, it grew revenue by 40% year over year. In the most recent 12 months, it has an increase of 54% in revenue year over year. From 2017 to 2018, they only grew revenue by 5.3%, but 2018 to 2019, they grew by 45%, and then 2019 to 2020 by almost 50%. So the growth has been accelerating year over year, and that's really great to see. And you can see that in the chart on the bottom, which goes from 2016 through present day, the most recent quarter. And you can see how it's slowly but steadily increasing every single quarter. So what do we think of Take-Two Interactive, the stock? Well, first, some high-level thoughts is they've been able to monetize their games extremely well for very long periods of time, especially the Grand Theft Auto franchise. And GTA 6 may be the most anticipated game ever. So I have to believe when it's ready to come out, it's going to break records based on how well the franchise has done and continues to do. And net income growth has been extremely impressive as well for this company. If you're looking at the most recent 4 quarters from 2016 through 2021, you can see the net income has risen every single year substantially, making massive gains from just $1.85 million in net income in 2016 to over $563 million in income in 2021. Now, it's also important to note that the revenue increase has been going up, but it is not that much in comparison to the net income. So with not as much revenue growth, they have been able to monetize and get much higher net income than you would expect. Now, Take-Two's balance sheet is also pretty impressive. They have a strong balance sheet with current assets at $4.24 billion, current liabilities only at $2.5 billion or so, and total assets of $6.62 billion against total liabilities of $3.15 billion. So they have a strong balance sheet, more assets than liabilities. But obviously, this balance sheet will be changed and affected by the merger, since they're going to be spending some cash besides also issuing shares, etc. So Take-Two's free cash flow over the past 5 years, the average free cash flow has been around $650 million. Now that number has been higher. It's been over $1 billion at times, and it's been under $500 million at times. But I averaged it out to get an idea of what this company is producing in free cash flow. And if you take a 25 times multiple on free cash flow that has been averaged over the past 5 years, assuming that they're going to have more free cash flow in the future, seems like a fair multiple to get a fair price for where this company should be. So if you multiply $650 million of free cash flow by 25 times, you get $16.25 billion. So I believe a fair enterprise value would be around $16.25 billion, and the current market cap is basically there, $16.5 billion. The enterprise value is slightly under that since they do have cash on hand. So on these metrics, assuming they can execute on this acquisition, have better growth and long-term profitability, I believe the stock is fairly priced after today's stock drop. So if you're wondering if Take-Two is cheap to buy, the answer in my opinion is no. It is priced fairly. I don't think they're cheap. I do think they are overpaying for Zynga, but I also believe they need the mobile exposure, so they need this company, and it was trading at a cheap price in comparison to where Zynga was in the past, so it looks like they're taking advantage and trying to get the deal while they still can. Now, Take-Two has always traded for a premium to other game makers as far as price to earnings was concerned. So personally, I am buying some stock today with the 15% or so pullback in the stock price. It's a relatively small position for the account I'm managing, but I do believe as a long-term holder, it's worth having some exposure to this game maker. I also think with Take-Two usually trading for a premium, when you get a chance to buy them for fair price, it's worth starting a position because you don't really get the chance to buy them quote-unquote cheap. So fair price seems fair to me, and I'm willing to start a position here and hope that the management can really execute on this mobile vision, keep the growth in mobile and bring their console games to have a brighter future through mobile as well. Now, if you made it to the end, please smash the like button, subscribe to the channel if you haven't subscribed. Let me know if you think this was a good acquisition, if you own either Zynga or Take-Two stock, and let me know what you think about my thoughts on going to where the puck is heading versus where it is in regards to buying companies, building games for the metaverse, for virtual reality, augmented reality, and building the team you need for the future we may have. Again, thanks for watching, and until next time.